Good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, August the 27th, 2025, recording this in the morning. To be honest, not a huge amount going on, relatively quiet on the data front, on the political front, and on the sort of economic macro front. But what we did get yesterday, just to zoom out and keep a look on the US economy, we got some second tier data. Again, a bit of a sort of a noisy number from durable goods. But overall, yesterday, the data and surveys we got were, a little bit more positive than expected. So we see here, for example, durable goods order had expected to come in at almost -4%, came in at -2.8. So that was less bad than expected. Then if you look at some of the core numbers, non-defense excluding air and ship non-defense excluding air, you can see that they came in at 1.1%, above the 0.2% expected. And the revisions also, you can see over here, were a little bit better. So overall, durable goods, as I say, it's quite a noisy number, but overall, indicating, fairly solid demand and nothing sort of dramatically negative. We also got yesterday the conference board, so the consumer confidence. And as you can see here, the confidence came in at 97.4, which was higher than expected and higher than last time. Revisions also are up. And then if you look at the expectations and sort of current situational present situations, fairly positive. So overall, the conference board sort of expectations and confidence measures were pretty good. Durable goods were pretty good. So, what that's telling us is, a little bit more sort of positive news, so to speak, or at least not negative news. Now, in terms of today, on the 27th, as you can see here, we don't really have anything at all. We have mortgage applications, which is probably a bit sort of second tier. Tomorrow we get some revisions to the GDP and the initial jobless claims, but for today, fairly quiet. Just in terms of what's going on with the Fed, actually, the other sort of big thing is that the markets are quiet because we do have Nvidia's earnings this afternoon after the bell. After 4 p.m. And of course, that's going to really probably determine the sentiment and also the direction of the equity market, specifically the NQ. We all know that's a huge cap, a huge weighting in that. But just in terms of the Fed and where we're at in terms of pricing, as you can see, it was settled into pretty much a done deal, 85% for September. For the December, we're over sort of two cuts here, 2.1 cuts, or about 55 basis points. So that's where the market has settled at the moment. We did initially get a little bit of a pop on the news that Lisa Cook was going to be replaced. As I think I mentioned yesterday, she's indicated that she's going to be taking legal action and she will fight that. Let's see what happens. I mean, I don't really have any particular sort of legal knowledge about whether that's going to be enough cause for the president to fire her or not. That'll be settled in the courts. But it does seem as though the market has, we had an initial pop in the front end of the curve. And so the front end yields going up a little bit and a bit of a steepening, but that's kind of calmed down now. So I think the market will probably move on pretty quickly from Dr. Cook's potential dismissal. And also what's interesting is that the Fed yesterday, as you can see in the headline, the Fed, after thinking about it for a few hours, they came out with, I think there's a headline here. Fed says it will abide by any court decision on Lisa Cook. So the Fed has obviously decided, Jerome Powell has decided it's better not to sort of poke the bear at this point and just let that play out through sort of the courts. So that's probably turning into a bit of a non-issue. What will be interesting is that if she does indeed that's sort of determined that Lisa Cook needs to step down, we have a replacement for Lisa Cook who's going to be nominated, then also Stephen Mirren. So suddenly we have four, in theory, sort of pro-Trump or Trump nominees on the board, and that will give them a majority, and that's going to be at least should keep things keep things relatively on the dovish side. Although having said that, of course, you have other regional presidents, so at this point it's a little bit too early to draw conclusions. But definitely, what Trump's game plan here seems to be is, of course, is to stack the Fed, not only the board of governors but also the regional presidents as much as possible over the next few months. We shall see. Okay, in terms of other stuff, let's just go through the markets. We had US auctions yesterday, a 2-year. That went actually pretty well. Probably give it sort of like an A rating, so to speak. So that went well. So that's indicating that market participants are quite liking the front of the curve. And this is just the pricing here. And you can see here that that's staying fairly well bid is the ZT here, the 2-year. And the market really is thinking that over the course of this bond, so 2 years, let's say 18 months, 2 years, the market is really thinking that The Fed will probably cut, 100, 125 basis points in some shape or form, in September, October, December, January next year. If cuts are coming, and there's no reason really for this to trade, too much lower than, let's say, down here somewhere at the bottom of its range. So if anything, it's probably going to just range here. And if we get any weak data or any more news on the Fed, it could even sort of push up to this 104.02 level. So the front end of the curve is pretty much supported. We get the 5-year auction today and the 7-year tomorrow. I see no real reason for the 5-year to perform badly. What might be more interesting is the 7-year tomorrow. We're starting to get a little bit of duration, but we'll see how that goes. In the meantime, you can see here that the ZB, for example, the 30-year bond, or even the ultra bond, would be better to look at that. You can see that that's actually trading very heavy. So you see here, just again, the 2-year, you see where that is sort of like a bull flag looking to push up a little bit higher. And you see the ultra bond, which really has an underlying of at least a 20 plus years. So it really is the more of the long bond rather than the ZB, which has an underlying minimum of about 15 years. Anyway, so the point is here is that the UB, you see here that this is trading quite heavily, and we're getting, essentially a steepening. And the way to play this is obviously the steepener. Keep on saying it just keeps on steepening higher and higher. There's the 2s30s, even the 2s10s starting to push up. And again, for all the reasons we all know, it's indicating that the economy is remaining relatively robust. Inflation is still sticky. The Fed is becoming maybe a little sort of dovish, cutting into sticky inflation and a relatively robust economy, and that there's still deficit spending. So all of that is going to steepen the curve. So bring down the front end yields a little bit and keep the long end yields supported. So it's a steepening of the curve is really the main sort of thing we're getting, is the main way the bond market is acting at the moment. In terms of equities, VIX remains very, very low. I'm seeing some commentators are starting to say that the short positioning is almost getting to extreme levels. So there's a lot of shorts in the market here, and historically that's sort of a presage that's sort of come before a fairly big sort of spike upwards, a bit of a sort of a short squeeze in the VIX. We shall see. Who knows? Maybe if Nvidia disappoints in any shape or form, could that cause the stock market to come off a little bit, which would push up the VIX and the volatility? For sure, that's a possibility. But just talking about the stocks, you can see here, just again, obviously waiting for Nvidia this afternoon. But you see it sort of pushing at highs on the ES. You see the Nasdaq not quite as high, but still, you can't say there's any sort of technical damage here. Still just hovering above the 20-day moving average and well above all the other moving averages. So again, if Nvidia comes in strongly, I expect that to retest the highs. Obviously, anything weak will be the opposite. So it's a fairly binary kind of situation there. Just in terms of going underneath the hood a little bit, it is interesting that you see the Russell here. It's performed pretty well, not quite at highs. If we just go back a little bit, not quite as high as compared to the other two main indices here, but definitely it's had a strong few days. And that's just because I was reading some research yesterday afternoon, that if you look at the small caps, the Russell, I think something like it's about 45% of them, they have a much shorter duration loan kind of duration compared to, let's say, the S&P 500 companies. So the point is that anytime that the front end of the curve does well, this does tend to really benefit the Russell, the small caps, because their loan durations on average are a lot shorter than, let's say, some of these huge companies which you find in the S&P 500, even some of the big NASDAQ companies. And therefore, we tend to get some outperformance anytime the 2 and 3 year yields go down a little bit. That tends to be particularly good for the small caps, and that's what we're seeing here. Some pretty good sort of performance there. On the other hand, if you look at the Mag 7s, again, that's probably going to be dependent on Nvidia. Probably going to be pretty calm today. That could push to new highs if Nvidia goes well. Otherwise, might just take a bit of a breather. If you look at the equal weight, just coming off a little bit here. So this is the RSP ETF. The equal weight's coming off a little bit, but at the end of the day, it's difficult to say anything negative about any of these equity charts. They're all well above the moving averages, all hovering around the top of the highs, top of their trading range. So at this point, we have clearly a government which is trying to support the stock market. It looks as though a lot of the tariff stuff has sort of been priced into the market at this point. China is still not resolved. It seems to be ongoing, grinding away, another 90-day extension, et cetera, et cetera. And definitely, there's pressure on the Fed to be cutting interest rates. Now, is that going to cause the long-term interest rates to go down? Probably not. But the reality is that the US Treasury under Bessent has quite a few levers to pull. And, there's even people talking talking about some form of yield curve control could come in at some point in terms of liquidity manipulation and everything. So the point is here that this is a relatively positive backdrop for stocks. The only thing really is to say, if we get a weakening employment market, that could eventually cause some weakness in the real economy, and that, of course, would eventually feed into companies' performances and earnings. But we're probably several months away from that at this point. Okay, what else is getting the market's attention is just what's going on in France. I kind of mentioned that there is going to be the confidence a vote in the government on September the 8th, which was a little bit unexpected by the market. So in general, there's just quite a lot of concerns about the fiscal sustainability of the French situation. Too much spending, too much deficit spending, and as we can see here, just looking at the spread of the bonds. So if we look at, let's say, just look at the OATs, which is the French ones, you can see that here they're trading in a pretty heavy way, sort of keeps on falling. Compare that to the Italian BTPs, which are in a range, and if you look at the German 10-year, that's also actually pushing up a little bit. So the spread is starting to reassert itself a little bit between France and Germany. If you have a look at it here, you see that's really been where the big price action has been over the last couple of days, the big movements. Again, maybe a bit low liquidity. Remember, everyone in Europe is still probably pretty much in holiday mode. That's going to be coming to an end maybe next week. Same in the States. We have Labor Day on Monday. The markets will be closed. So really, the market's going to get back into serious business next Tuesday. But you do see here that the spread of the French yield over the 10-year equivalent has gone up from, let's say, about 68 basis points up to about 78, 79. So it's widened about 10 basis points here, which is quite significant. And we're starting to get up to some of those earlier levels from, sort of several months ago, where there was, political instability. And there is some talk that the French government could actually fall on September the 8th, and that would necessitate new elections, which, of course, is going to be a lack of stability. Now, the question then is that affecting the euro? This sort of political instability starting to mount a little bit in Europe. I mean, not hugely against the US dollar. So if we have a look at that, you see the euro is trading a little on the heavy side here and is definitely in some kind of sideways consolidation. But again, probably waiting for a little bit more direction from the US situation here. But one could argue that, maybe that's not helping the euro in any shape or form. But really where we see that sort of tension, it's not maybe even against the US dollar, but it's more on a couple of the crosses, which I mentioned yesterday. And you see, for example, against the pound sterling here, the euro is, sort of, yes, a little bit weak, trading a little heavy, but especially against the Swiss franc here. You see, the Swiss franc, of course, is traditional safe haven within Europe, not only globally, but specifically within Europe. And we can see here that the euro is trading sort of towards the downside against the Swiss franc. And if that political instability continues in France and actually even ramps up with the divisive situation in the French Parliament early September, that first week of September, followed by sort of divisive elections, it wouldn't surprise me at all to see Euro Swissy just keep on sort of grinding down here, maybe to retest these levels down towards 90, 93 or so. We shall see, but that definitely is where it seems to be playing out. In terms of other markets, not a huge amount going on, as I say. We did have some negative talk yesterday about oil. There was a few sort of forecasting, significant surpluses and whatnot at the latter half of this year, and specifically in 2026. We also saw Trump talking in the Oval Office, essentially saying that he was happy that oil is getting down towards 60. He likes cheap oil. He wants cheap oil. He wants to deliver even cheaper oil. So just even psychologically, or at least, I don't know, from a sentiment point of view, you have the American president talking down oil. I'm not saying that's causing the price action, but it's certainly not causing a lot of confidence in the space. And you ally that to increasing output by OPEC Plus and potentially increasing surpluses globally as we go into, as I said, the end of this year in 2026. And the sentiment is a little heavy for oil. Be interesting this morning, we do get the official DOE inventory numbers. Let's see if they confirm what we got last night or yesterday afternoon, the API. And the API is the private data. We got a draw last night in crude oil of only 1 million barrels. The market was expecting more, about 2 million barrels as a drawdown. So that was a little bit of a negative. On the other hand, gasoline was a drawdown of about 2 million barrels yesterday afternoon, and distillates 1.5. So there were drawdowns, just not as much maybe as the market had hoped or had expected or anticipated. But let's see how the official data this morning at 10:30. Let's see how that stacks up, and if that is disappointing, there could be a little bit more pain for oil, just sort of to push down maybe to this recent low here of about $62 or so. In terms of other stuff, I don't think there's too much more. I have to say, at this point, gold just trading in a range on the side. So I think I might leave it there, guys. I don't want to waste anyone's time. There's nothing particularly exciting to say. As I say, I want to be looking at the French and the Italian bonds today and the German bonds just to see that sort of how that's all sort of functioning over in Europe, especially this morning. But as I say, caveat is that relatively low liquidity. We don't want to overread into that until we really get back into the markets next week. And then, of course, all eyes will be on the big one, Nvidia earnings this afternoon after the bell at 4 o'clock, which will probably determine the sentiment going into the end of this week, the Labor Day weekend, and indeed into the market next week. Okay, thanks very much. Keep it short today. Have a great day, and we'll keep this going tomorrow. Thanks very much.